Imagine just for a second actually becoming a millionaire and doing it without winning the lottery, without inheriting a trust fund, and without even making a massive six-figure salary. Honestly, it sounds a little bit like a fantasy, right? Well, in this explainer, we're going to unpack exactly how millions of regular, everyday people are quietly building absolute generational wealth using a strategy that is literally hiding in plain sight.
All right, let's just dive straight into this. $10. It is a tiny, almost completely forgettable amount of money. But here's the thing. Investing just $10 a day is the exact habit people are using to completely transform their financial lives. And honestly, the craziest part about all of this, we totally ignore it, mostly because $10 just feels way too small to actually matter.
Now, that feeling brings us to what is easily the biggest myth keeping people broke today. It's this persistent illusion that you need a ton of money just to start investing. We hear it all the time, right? But looking at the source material, this is exposed as a complete and total lie. It's essentially just a mental block that stops people from taking action before they even get off the starting line.
Let's be brutally honest for a second about where our cash actually goes. A premium coffee, a quick run through the drive-thru, maybe a streaming subscription you swore you were going to cancel 3 months ago, or just, random late-night online impulse buys. A $10 bill evaporates almost instantly every single day, and we don't even bat an eye. But what if, instead of just mindlessly spending that money, you actually captured it? Think about it. Redirecting just $10 every day seamlessly combines into roughly $300 a month. Now sure, $300 a month might not sound like lottery money right off the bat, but it is a highly actionable total that you can absolutely put to work in the market.
So the really crucial insight here is that investing isn't actually about having massive starting capital. It's about time. Time is the ultimate secret weapon, and it's something the wealthy understand infinitely better than the rest of us. Giving your money the actual runway it needs to grow, that is the real game changer.
To really grasp why time is just so unbelievably powerful, we have to talk about this famous observation from Albert Einstein. He called compound interest the eighth wonder of the world. He completely recognized the absolutely explosive reality of your money going out into the world and literally making its own money.
The mechanics behind this are just fascinating. With compound growth, you invest your money, it earns a return, and then, here is where the absolute magic happens. That new money starts generating returns too. It creates this relentless, unstoppable snowball effect, literally turning a tiny daily habit into explosive long-term growth. And when you actually run the numbers, it brilliantly illustrates exactly what that snowball looks like in real life. Let's say you invest that $300 every month. By age 30, you've built up tens of thousands of dollars. Keep going, and by age 40, you're looking at hundreds of thousands. And by the time you hit retirement, you shoot right past the $1 million mark. And remember, all of that originated from just $10 a day.
The big core takeaway here is that consistency totally beats luck. Every single time. Your average everyday millionaires, they aren't necessarily financial geniuses, and they definitely aren't out there gambling on the latest crypto hype. They simply started way earlier than everyone else, and they stayed incredibly, almost boringly consistent with their daily habits.
Okay, so you might be wondering, what are wealthy people actually investing in? Well, they are very rarely picking risky individual stocks. Instead, they use highly effective, broad vehicles like index funds. Instead of betting the farm on one single company, you buy into a giant basket. You own fractional pieces of hundreds of top businesses all at once, which minimizes your risk while still capturing that broad market growth.
And when you look under the hood of these funds, we're talking about companies you probably rely on literally every single day. Apple, Microsoft, Amazon, Google, Tesla. It makes the whole strategy instantly tangible. Your $10 a day is literally buying fractional ownership in the biggest, most powerful economic engines in the entire world.
And the reason this specific strategy is so incredibly bulletproof really comes down to a reliable historical baseline, roughly 10%. The S&P 500, for example, has historically averaged around a 10% yearly return over long periods of time. That steady, reliable growth is the exact engine that drives that compound interest snowball we talked about earlier.
Now you have to ask yourself, if the math is this powerful, why in the world isn't everyone doing it? Well, the source material points out a really stark contrast in mentality. What we call a poor mindset gets hyper-focused on short-term gratification, buying liabilities first, like the newest phone or designer clothes or luxury cars. But in total contrast, the rich mindset prioritizes buying assets. They literally force their money to work for them before spending a single dime on luxury.
This is honestly a massive cultural blind spot for us right now, and it is heavily, heavily fueled by social media. It's this relentless, exhausting battle of looking rich versus actually being rich. People are just so obsessed with comparing lifestyles on their feeds instead of building their actual net worth. And that exact desire for the mere appearance of wealth, that's what keeps millions of people financially trapped.
But breaking out of that trap is totally doable, and it requires a ridiculously simple, automated roadmap that costs less than a daily lunch. Step 1, you just open a free investing app. Step 2, you select a low-cost index fund. And Step 3, you set it to automatically invest every single week. You build the system once, you step back, and you let the market do all the heavy lifting for you.
It really truly is that simple, because when it comes down to long-term wealth, your behavior absolutely trumps your intelligence. You really don't need a PhD in finance for this. You just need the emotional discipline to not panic sell when the market drops, and to not start gambling on risky trends during a boom. Patience is genuinely your most profitable skill here.
But let's be totally honest here. There is a hard truth you need to prepare for. Building wealth starts out incredibly, painfully boring. The first few years, they're going to feel impossible. You won't see much progress. But the later years, they feel unbelievable. Most people quit during those impossible years, before the magic of compounding really kicks in. But if you refuse to quit, your growth will eventually accelerate dramatically. So if we distill the core takeaway from all of this research, it's this. Small money invested consistently will absolutely crush big money invested too late. Starting right now gives you a mathematical advantage that is nearly impossible for someone to catch up to a decade down the line, even if they suddenly start throwing thousands of dollars at it.
Which brings us to one final, really provocative question. The next time you're holding a $10 bill or you're about to tap your card for something you'll probably forget about by tomorrow, ask yourself, am I going to spend it or am I going to invest it? The difference between struggling and building real generational wealth often comes down to just that one simple daily decision. Thanks for tuning into this explainer. Now go out there and put that $10 to work.